I'm here with Ken D'Entremont, who's the CEO of Medexus Pharmaceuticals. Medexus is listed on the Venture Exchange with the ticker MDP and on the OTCQX with the ticker MEDFX. Thanks for joining us, Ken. Can you tell us a bit about how you got involved with Medexus and how the company came to be?
Thanks for the invite, Tina. Medexus is a company that I founded as a private many years ago, Canadian specialty pharma company. We found a good opportunity to expand into the US with a product line that I knew well. We had already licensed it in Canada and wanted to do so in a public vehicle. So I guess about 24 months ago now, we put together 3 specialty pharma companies, the one I founded, the one we acquired from Medac GmbH, which was Medac Pharma USA, plus the public company, Pediapharm, put all 3 specialty businesses together, renamed it Medexus, and we've gone forward as a public company with a commercial platform in North America since then.
So since the merger, the company's grown significantly and is now on a revenue run rate of over 100 million annualized and generating operating cash flow. Can you talk about how you got here and what the growth prospects are looking like going forward?
Yeah, we got here, I think the first step was the amalgamation. Pediapharm, the public company, before we amalgamated, was doing about 10 million in net revenue. We put the 3 companies together, combined, they were doing 34 million net revenue. These are all Canadian dollars. Then we had strong organic growth with some of the core product assets, plus an acquisition of Ixinity at the end of last year, which brought us to 74 million net revenue. And now with the Q1 announcements out, you can see that we announced 27.5 net revenue. So clearly we're on a strong run rate to be over 100 million this year. So we've had strong organic growth from the core assets being Rasuvo and Rupall, Metoject, and now Ixinity. And so we expect that run to continue. These are good growth assets that will continue to grow into the future and could bring us to 150 to 200 million. Without any further M&A.
So how do you expect to fund your growth going forward?
Well, we're a cash producing company. So, any licensing deal, we can fund that ourselves out of cash flow. So that's how we see it going forward. We're obviously looking at M&A, but I think in the near term, most of our focus is on licensing deals.
And what type of metrics would you be expecting to pay on an acquisition?
That's a great question. It's a matter of finding the right asset. First it has to be strategic. We're not looking for anything outside our core therapeutic areas, which is primarily rheumatology, hematology, specialty oncology, places where we can leverage existing infrastructure. So that's the first criteria. It has to be strategic. And then after that, obviously we're looking for well-priced assets. I think we've been pretty good at the 2 M&A deals that we've done. The latest one, Ixinity, we priced it and bought it for less than 1x revenue, which I think was extremely well priced. The Medac transaction, which was 24 months ago, we paid 50 million for a $34 million revenue generating asset. But much of that 50 million, 30 million in fact, was an EBITDA trailer. So we didn't pay a lot of cash up front. We kind of de-risked it by having much of the payment related to future revenue.
So to summarize, why do you think investors should be looking at Medexus right now?
Well, I think they should be looking at Medexus because we're an excellent growth story. The platform is completely built out. So as revenues continue to increase, costs are basically flat. So we continue to produce a good EBITDA and strong cash flow, and we'll do that, into the future. And then any additional licensing or M&A will just continue to further leverage the existing infrastructure.
Well, thanks, Ken. That's a great introduction. I'm looking forward to hearing the full presentation on October 8th at 2 p.m.
Thanks, Tina. It's nice to see you.